Hey guys, today I wanted to go over the 5 credit myths that I hear probably most frequently. Yes, there are more, but these are the most common ones and give you guys some clarity on each one. Again, this is Mike Colantone. I'm a loan officer with Geneva Financial, and let's get into it. All right, so this first one is kind of a two-part one, but the biggest credit myth that I see or hear about is people thinking that their credit score is going to drop somewhere between 40 to 60 points by having their hard inquiry or a mortgage pull on credit. This simply is not true. If anything, your total score may go down anywhere from 3 to 5 points for one inquiry. Now, the second part to this myth is, well, I had my credit pulled by another lender. So if you've had your credit pulled by another lender within 15 to 30 days from that first pull, you can have your credit run by as many mortgage lenders as you please to shop for the best deal without it negatively affecting your score. So what happens is the 3 major credit bureaus see that you're shopping for a mortgage. They can tell what type of inquiry you're taking on, and they identify that, and what they do is they lump it into one hard inquiry, so then that way you don't get dinged. You know, they do this because they want people to shop for the best loan program, best rates, best fees, and without it negatively affecting your score. Second myth I want to go over is when people say my Credit Karma score says this. So Credit Karma, again, I don't want to say anything bad about a Credit Karma or any of the free credit monitoring tools out there today, but the point of this myth or answer to this myth is don't be married to those scores. Credit Karma is usually 20 to 40 points off of what your true middle score will be. And I've seen it both ways. Sometimes people have a Credit Karma score that says 620, for example, and I pull it and it's actually 640. So point of debunking this myth is don't be married to your scores, but go ahead and use Credit Karma as a great tool to monitor items that come up and credit pulls, things like that. Credit myth number 3 is the more debt that I have, the lower my score will be. So this is not the case. If anything, part of how your score is calculated, it's based on mixed use of credit. And it's actually 15% of how your score is calculated. So what mixed use of credit is the credit bureaus like to see that you can handle different types of credit. So if you have a mortgage and a car or auto trade line and credit cards and then maybe some other installment loans, that may be a good thing. And the total amount of debt isn't going to negatively impact you, but you know, that's something to think about. So don't be held on to that. The more debt you have, that does not matter. Income is not calculated when it comes to monitoring credit, and you are okay to take on new debt. All right, credit myth number 4 is I don't use credit, so I must have a good credit score. This is not true. Actually, what happens when you don't use credit or don't have any open trade lines over, a few months to a year, what you're going to see happen is your credit score is actually going to drop, and it may drop to the point where you may no longer have a score. So for those people out there that think that by not using credit, they're better off, that is not true. If anything, what you should do is have a couple of small credit cards or just small credit lines that are open. Maybe you're using it for gas or going out to eat, something like that where you can charge the card and pay it off right away. That's going to do the best or affect your credit score most positively without taking on debt or, using credit per se. The last credit myth is if I have a credit card or an open trade line and I don't want to use it anymore, I'm just going to close it out. Do not do this. This will negatively impact your score, or at least won't change your score, because part of how your credit score is calculated is payment history. That's about 30% of how your score is calculated. If you have a card, let's say you have a Bank of America credit card and you're done, you don't want to use it, there's no more points to be built up, you're done with it. What I would recommend doing is going ahead and paying that balance down to a 0 balance, and then put the credit card away. Store it away somewhere where you're not going to be able to access it, charge it up again, and just leave it open. Do not close that account. So the longer your credit card is at a 0 balance, you are going to continue to increase payment history, and you'll actually see your score improve. So don't close it. It might close over time due to inactivity, but definitely don't close it on your own. Thanks for taking the time to watch, guys. Those are my 5 credit myths. Hopefully this gave you a little clarity and you feel more informed. If you guys have any question on anything that I said today or any other questions about credit in general, please let me know, comment, leave some suggestions. Anything I can do to help, I appreciate it. Thanks for watching, and I'll see you in the next video.